CNBC TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Power Breakfast. We now have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. It's a Monday morning, so a lot of cues. Ekta, tell us what are the market cues that are on your radar today?
Morning. Well, we are waking up to what was a strong US market overnight on Friday. We had the Dow, which was higher, S&P higher, Nasdaq, as well as, the markets hitting the best levels that we've seen in 2023. The US non-farm payrolls data indicated that the US economy continues to be very resilient, with the unemployment rate falling to 3.7% in the month of November versus 3.9% in the month of October. In terms of commodities, we had the crude prices, which did surge after what was a strong US jobs data. But gold, however, remained in a range, so above $2,000. It seems as though the commodities index or the commodities in general seem to be on up move overnight. Well, in terms of the markets last week, the Indian market saw the biggest weekly gain in more than a year. All of the frontline indices hit record highs on Friday. The Nifty hit 21,000 for the first time ever. The rupee remains in a range around record levels. FIIs continued to buy, so FIIs bought shares worth around 3,632 crores on Friday. DIIs sold shares worth around 434 crores. So the data with regards to the markets and the market setup continues to be strong. Maybe we could see some amount of consolidation today, simply because Asia is a bit subdued post the Chinese data. So that could probably be a little bit of a deterrent. But overall, in terms of the other indices, we seem to be quite strong and resilient at this point in time. Macro data, India CPI, India IIP data, as well as the US inflation data is due from the macro front. We have a US Fed decision as well. And the India IPO landscape is gearing up for what is a busy week ahead. 6 IPOs collectively are going to aim to raise approximately 2,500 odd crores. So that's going to be something to watch out for. As of now, the GIFT Nifty is indicating maybe it could be a little bit of a consolidatory start, but nothing to write home about considering the strong gains that we've seen.
Oh, yes, we have. Thank you so much, Ekta, for all those cues. But a lot of stocks that will be in focus. Urmaz has that list. Good morning.
Morning, Sonal, and I'll start off with Tata Motors, where the prices of its commercial vehicles are set to go up by 3% starting the 1st of January of 2024. Bank of India closed its QIP on Friday, which was subscribed 4.1 times. It received bids worth over 18,500 crore rupees as compared to its plan to raise 4,500 crores through the QIP. And the issue price of the QIP has been fixed at 100 rupees a share. DCB Bank had a board meeting on Friday, and they have decided that its promoter Aga Khan Fund for Economic Development will infuse 830 crore rupees in the bank, and that will be done after the bank issues shares to them on a preferential basis, which will be done at 137 rupees a piece, which is a 14% premium to Friday's closing price. And post this fund infusion, the promoter stake will rise to 15.66% from 14% earlier. Multiple updates on GMR Airports, and I'll start off with the confirmation of a CNBC TV18 news break, where we had reported on Friday after the block deal that GQG is likely to be a buyer. It emerged as one of the largest buyers in that transaction. It brought nearly 29 crore shares, and Nomura and some others were also buyers in that block. GMR Airports, where their Goa International Airport charges have been increased starting the 1st of January of 2024 to the 31st of March 2028. And lastly, another unit of GMR Airports, which is the Visakhapatnam International Airport, has executed a financing agreement worth 3,215 crores to finance the first phase of development for the Bhogapuram International Airport. Newland Laboratories, where its founder has sold 4 lakh shares in the open market, that amounts to around 3.1% stake. Wipro has seen another top-level exit, where its chief growth officer has quit. And lastly, Subros, where AC cabins are, which will be manufactured in trucks from the 1st of October 2025, are mandatory from that date. Back to you.
Okay, all right. That's a long list. Thank you so much, Urmaz, for joining us. So those are some of the stocks that will be in our focus. But a lot of cues from the F&O space as well. Nigel is joining us now. Hey, Nigel.
Well, morning, Sonal. We had a very, very good past week, and it appears now the bulls, they want to end 2023 on a good note. So we'll be watching out for the central bank decision that you were talking about earlier with regard to the Fed. But how are the FIs positioned? Well, on Friday, yet again, we saw they added some mile-long positions and they covered some shorts. And that's what takes the long position to around 58%. And if you look at it, in a matter of close to around 7 sessions or so, the net short positions of the FIs from more than 50,000 net short contracts. They've gone to a net long position of close to around 36,000 contracts. That's telling you the swing factor of around 92,000 contracts just in a matter of a week or so. How's the options data shaping up? Well, the 21,000 call, that has the highest open interest on the call side, while the 20,900 put, well, that has a fair bit of open interest as well. And you just plug in those numbers, well, you have some support at around the 20,700 and the 20,850. And I say that out here there is support because the 20,850 mark, almost all the three last sessions, we went and we visited that level. And from there, we saw a bit of a bounce. That becomes crucial on the upside. Since the 21,000 call has the highest open interest, the premium out there is roughly around 110 rupees. I'm looking at the 21,110. That'll be a bit of a resistance zone. But what has changed, particularly in the last week? Well, one thing is the Nifty Bank has come back to the party. So after a very, very long, we had the Nifty Bank that was actually outperforming the Nifty. We haven't seen that, so that's rather good news. And from the Nifty Bank, you had 30% or so, which was HDFC Bank. And that was a bit of a drag. I'll tell you what, this one is coming back in style, and this should be a portfolio stock for you. Maybe in the near term, things could still be a little bit, uncertain out there. But from a longer term perspective, this HDFC Bank was up close to around 6% in the past week. It had its best week since November 2022. And even post this small move, valuation-wise, well, it's still trading at a bit of a discount. So delivery-based buying is what we're seeing on HDFC Bank. And I'll tell you what, if Nifty has to move up towards the end of this year, and I think it'll be the stock to watch in 2024, HDFC Bank should be kept on your radar. The GIFT Nifty is suggesting a flattish opening. Back to you.
All right. Okay, guys. Thank you so much for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break. Up next, you'll get you all the cues from the commodities market. So stay tuned for that.
CNBC TV 18, embarking on a quarter century of excellence.